Good day, good morning, good afternoon to all of you. Welcome to the fourth webinar on financing Biotrade and ABS, organized by the Secretariat of the Convention on Biological Diversity, especially the ABS unit and the BioInnovation Africa and ABioSA projects implemented by JFET. My name is Katrin Münch and I have the honor to guide you through this following 90 minutes. A warm welcome from my end, and I will give you a quick overview what you can expect in the following 1.5 hours with a brief overview of the agenda. First of all, we will have the official opening and welcoming remarks from the head of the ABS unit at the Secretariat, Dr. Tauko Shikongo. Then we will deliver a short input on a project example from our project, a study that will be presented by Cyril Lombard, who works as an advisor for the project on financing mechanisms supporting biotrade and bioprospecting in South Africa and Namibia. We will have some time for questions from your end and hope to can give you the answers. And then following is a panel discussions with participants from this experience in Southern Africa, from organizations like PrimeAfrica, from the BioPANZA finance cluster in South Africa, and also market access cluster members from TIA, SIPO, and also from the ABioSA project and others. We will have again some time for questions and answers, and then at 3:30 European Central Time, we will close the webinar. The webinar is been recorded for further use, and all links and information we share within the webinar you will have access afterwards too. A huge thank you also to all the people involved in the organization, especially also from the Secretariat to Nia and Alexandra, who are supporting also today with a technical backup. Thank you also upfront to the panelists for your time. Most of you have already joined. And now I would like to hand over to Tauko on our opening remarks and welcome. Tauko, yours the floor.
Thank you, Katrin, and good day or good time of the day to everyone who is joining us today from different parts of the world. It is indeed my pleasure to welcome you to the fourth session in our webinar series on capacity building and development under the Nagoya Protocol. As you recall, we launched this on the 29th of September of this year, and this series will continue through to the end of the year. And we greatly appreciate your continued engagement throughout this series. The details of the series are available in your emails and also in the chat as we proceed. And let us just, before we proceed, briefly have a look at the journey that we have come so far. The first webinar, we explored the ABS Capacity Development Initiative, tracing its evolutions since it began in 2008 and its objectives and the impact of interventions over nearly 2 decades. Then we went on to the second webinar, where we examined the BioInnovation Africa initiative, which focused on strengthening biodiversity-based value chains, promoting ethical sourcing, and empowering local communities and indigenous peoples to benefit fairly from the use of genetic resources. Then we had recently the third webinar, where we discussed the capacity building and development action plan under the Nagoya Protocol. We looked at its purpose, what it intends to do, and how it can be leveraged to support implementation of the Nagoya Protocol at national and international level. What we see as a common thread across these sessions so far has been the critical need for financial resources to support capacity building and development at national and local levels. And therefore, if the goal of all of these engagements is to generate benefits, then financial investments are essential to, at the onset, develop policy, legal, regulatory, and administrative frameworks, as well as to add value to generate resources through biotrade and bioprospecting, and to understand markets and develop products ready for commercialization so that benefits can be shared equitably between providers and users. Today, we recognize that parties are at different stages of implementing the protocol. Some have established policies and legal measures, others have entered into ABS agreements, and yet some are already realizing those benefits. What is clear is that financing is vital at every stage. This brings us to the focus of today's session, blended finance for biotrade and bioprospecting, and the transition from projects to SMEs and ultimately to fully fledged businesses generating profits. These developments have implications for all stakeholders. We will today hear insights from colleagues involved in the ABS Commerce Development Initiative and related projects such as the BioInnovation Africa, ABioSA, which stands for ABS Compliant Biotrade in Southern Africa, as well as the BioPANZA initiative, which is a bioproducts advancement network of South Africa, a public-private coordination network. Before we begin, a quick reminder, as we've been saying all along, COP6 next year, October, in Yerevan, Armenia, will consider the assessment and review of the effectiveness of the Nagoya Protocol. To support this process, parties are kindly reminded that the deadline for submitting the first national reports under the protocol is 28 February 2026. A recording of a dedicated webinar held on 29 September to support the process is available on the ABS Clearinghouse. You'll also note that we have sent out 3 surveys, 1 survey to industry or users, 1 survey to indigenous people and local communities, and 1 survey to ABS national focal points. And the idea is that this is part of the scoping study and the assessment and review. And we hope that all of you will have a look at those surveys and complete them before the 15th of December, as it will give us an idea of how we are faring in terms of implementing the protocol. With these few remarks, I warmly welcome you once again, and I add my voice to that of Catherine, as she thanked everybody that has been working with us to make this webinar possible. Let us make the most of today's session and benefit from the insight and reflections that will be shared by our various colleagues. With that, over to you, Catherine.
Thank you very much, Tauko, for this warm welcome and the introduction, also setting the frame of where we are. You can also observe in the chat, there is the recordings of the webinar series, where you can have a look into one if you missed one or if you want to see anything again, and also a link to the surveys in case you haven't had a look at it. So now we are going to look into one part of the projects we have been implementing, and Cyril will take the floor to present the mapping and analyzing and advising on financial instruments for small biotrade businesses in Namibia and South Africa. Namibia and South Africa, because one of the projects, or both projects, who did this analyze and are advising on and working with the partners on these topics are operating in these countries. It's an example, and we really hope that these insights on what the study brought and what we are doing in the context of the projects with that can help all of you in the different situations and different status of development within your countries. So if you're ready, Cyril, I hand over to you to let us know something about the key findings and recommendations of the work you did.
Thank you, Catherine, and thank you, Tauko. Let's flip this up. Does that screen show correctly?
Yeah, it shows in the presentation mode.
Okay, thank you. So this is a bit of a summary of quite a big study that was done, and I'm probably not going to do justice to the whole study. I did this with a colleague, Dagmar Hansbein, in Namibia, and we also had some interns supporting some of the work. So the work was not only mine, it was a team job with lots of inputs from the other colleagues at GIZ's different programs. There will be somewhat of a focus on South Africa because I was responsible for that part, although there will be some mention of Namibia as well. The content, I'm going to talk a little bit about the policy context in which we operate in Southern Africa, especially South Africa. And we have a particular approach to biotrade sector development, which I think is worth mentioning. Because finance in any sector is a big subject, what we did is we looked at what the typical funding requirements are, and then we tried to look at what the specific funding requirements of the biotrade sector are. And then we looked at, well, I was responsible also for looking at what mechanisms there are in South Africa. And then I want to talk about some of the very big hurdles that the sector faces that make a big impact on the success or lack of success in some of the sectors. There's an interesting observation we made about what we would call adjacent sectors, which I'll mention and describe a little. And we learned something from that sector. We got some important feedback from some of the people operating in these funds that we came across. And that's some of that's incorporated in some of the work that's going forward in 2026 and onwards. And I'll do a very short summary. It's not comprehensive, but it's a short summary of some of the findings and some of the recommendations. And hopefully that can lead to a discussion amongst the panelists as well. Right, so the policy context in South Africa, we have a sustainable use approach. And the idea is that sustainable use leads to conservation if all other measures are followed and practices and regulations are followed. And the driving impetus is, apart from conservation and biodiversity conservation, is also that the uses lead to economic growth and jobs, and then start to contribute to the national GDP. So this underpins the approaches that we'll discuss next, and which affect the kind of financial mechanisms that we need in the sector in South Africa and Namibia, and probably other places as well. So this year is the white paper on sustainable use of South Africa's biodiversity. It's from 14 June 2023. It's available on the internet and is one of the policy contexts. I'll mention one other policy context, and that is our National Biodiversity Economy Strategy. This version here is the one that's open for discussion and consultation from the 8th of March 2024. And again, what you can see is in the impact statement that there is an expectation that bioprospecting, biotrade, and biodiversity-based harvesting and production systems contribute to GDP and jobs and small business development, and as well as restoration and sequestration. In many countries in Africa, there's a different policy approach and understanding of biotrade, bioprospecting, and the other uses of genetic or biological resources. It's a big subject, and I'm going to just make it very simple for the purpose of this presentation. So bioprospecting can be where you take an undiscovered species or a species of which the properties and the applications are undiscovered, and you carry out R&D and utilization, and that can lead to two broadly different categories of commercialization. One is a synthesis route, where you only need once-off access for the resource, and then you no longer need the resource. And the other outcome could be a biotrade product where there's an ongoing need for a value chain coming from the environment in the provider country. And what I've shown here is that in our policy context, bioprospecting also includes bioprospecting on a biotrade species and coming up with a new product. So the importance of this in South Africa and Namibia, these are both, all of these outcomes are cases of utilization. There are some exceptions. I don't think we need to go into the small details of the exceptions. And in this presentation, when I talk about biotrade, it's interchangeably meaning biotrade and bioprospecting. And I know that's different in other countries in Africa, but that's the context in which we work in South Africa and largely also in Namibia. So in South Africa and Namibia, we have quite a structured approach to the development of the biotrade sector, looking at the value chain and how to support the development of value chains, and that the value chains comply with regulations and generate jobs. There's obviously a national intent to bring more of the value addition back in country from the utilization of these biological resources. So there's a structured approach. Again, there's not necessarily the same approach across Africa. And I want to just make a point about two broadly different approaches. The one approach is what I would call the passive approach. And that is where companies in the user countries do the R&D. They apply for access in the provider countries. They lead the process. They fund most of the process, or if not all of the process. And the expected outcome is that ABS compliance of the local regulation by the user company will result in local benefit sharing and value addition and technology transfer. So helping going up that value chain, which from the previous slide. This approach, what I call the passive approach, requires less public-private finance. But in South Africa and in Namibia, there's a favored approach, which is what we would call an active approach, where companies in the provider countries are organized, supported to do the innovation, new product development, and open up markets and find companies and customers in different countries, including locally. And the expected outcome is that the sector is strengthened, and this leads to jobs and more internal capacity and local value addition. The drawback of this approach is that it requires more public-private finance to generate these local benefits from this active approach. Just on the passive approach, this speaks more to the old days of the early part of the CBD, where there was this expectation of this giant opportunity of green gold, where these big pharmaceutical and industrial companies would come prospecting in the provider countries, and they would lead the processes, and they would acquire the genetic or biological resources, and they would do the work. And this is basically an expectation that there was some degree of passiveness in the approach in the provider countries. And South Africa favors the active approach and the sector development and systemic approach, where you support local industries to get organized and to be more active and approach the market. Another aspect of the work here in South Africa in particular, but also in Namibia, is the structured systemic approach, trying to work with particular species. Yeah, you can see species 1, species 2, species 3. And we've been supporting the development of sector development plans, where the private sector and other institutions come together around a particular species and that value chain, and they work out on together to solve collective problems and to open up the markets, coordinate their own governance and investments, improve quality and regulatory compliance, develop new products. And most importantly for this discussion is by chance, all these different sector development plans have a sustainable supply pillar or area of focus, and that speaks to the conservation, biological protection aspects, and of course all the associated traditional knowledge can also be put in there, or in the regulatory compliance pillar. So this approach leads to the grouping up of many different organizations and companies, and you're able to start to make sector level and to make landscape level impacts. And this diagram here in the bottom right, that just shows that the ABioSA program has been working on this systemic approach where you look at the micro level, which is the small businesses, the meso level, which is the support organizations and support environment, and outwards towards wider society. So it's important that we talk about this structured systemic approach. Now, when we go to the typical financial and funding requirements of any SME, whether this is in automotives, clothing, tourism, whatever, and without going into all the details, if you look, just if you do a ChatGPT search and say what are the typical funding requirements, you get this long list: working capital, capital expenditure, human and capital talent costs, and all these different things that any business needs to have funding and finance for. So this is what we call the list of the usual suspects. And on top of the usual suspects, in the funding requirements for SMEs in the biotrade sector, they have additional funding requirements. And that's just a list of some. And they ABS compliance, including identifying and negotiating with holders of traditional knowledge, the fundamental science, the applied science, research and development, innovation, etc., on new species, which I'll come to the example of mangoes later, and hopefully that makes sense. And building new supply chains, and where maybe the species are wild and they've not been selected and they haven't been domesticated. These are huge costs that an industry has to bear, or an individual company has to bear. And they have to access new markets, and I'll talk a little bit later about the barriers that protect consumers in other markets. And of course, these species that we are commercializing from our biodiversity, they are new to consumers locally, often locally, and then obviously around the world. And the consumer awareness has to be built. These are new costs. I just want to draw your attention here to now. So when you're looking at these costs of SMEs, and you look at these types of costs, you start to see that some of these are sector level and broader societal issues that can't be borne simply by an SME in the sector. And then on top of all of these things, you have these unique funding requirements of an SME in the biotrade sector, and that's complying with the requirements of the expectations of the Nagoya Protocol. So you have the monetary benefits and the non-monetary benefits, and all of these things, including the non-monetary benefits, have a monetary impact on small businesses. And we had to look for where do you find funding mechanisms for all of these. Again, some of these are sector level issues. Conservation is an individual company concern, but conservation at a species level, landscape level, regional level, this is a sectoral level thing. And these costs, we were looking for where are the financial mechanisms for these costs. The long and short of it is, when we were going through all of this, is that we do not find systemic structured finance for this anywhere in South Africa or in Namibia or anywhere else for that matter. Just a few words of what we did find in South Africa. There's a giant step ahead going forward now in South Africa, that we have this Bioproducts Advancement Network South Africa, BioPANZA, which has these 5 clusters that bring this multi-party coordination possibility to the sector development. And inside one of those clusters, we have the finance cluster, which is fantastic. It brings the different stakeholders together to discuss funding of the biotrade sector. And this has also led to a small fund or a program that's got some funding called the Natural Indigenous Products Program, which is active. And so that was a positive that we found in the financial mechanisms in South Africa. And typically especially for the typical funding requirements of any SME, South Africa has a diverse ecosystem of incentives to support small businesses. So there's no, I mean, I'm not saying it's fully adequate, but it's a diverse ecosystem, and there are sources of funding for SMEs in the small business arena. And equally so in the innovation, research and development. This is a complex and diverse set of instruments that they have here. If you look on the left-hand side, you've got basic research, you've got applied research, technology development, technology and market validation, etc., all the way to business growth, amongst some other things. But when you dig for the Biotrade specific needs at these types of instruments or groups of instruments, you find things that are missing. For example, the non-tariff measures, they are not covered yet. They're not yet part of the radar of these funding mechanisms and operators. And other things that are missing, which you can class at the beginning of a research and development process for Nagoya Protocol, is that you have to start doing your free and prior informed consent processes. And I'll make an example from Namibia, and a friend of some of us here around this webinar. He made the point that if a company wants to come and do some bioprospecting work and access some samples from the Overhimba people in Kunene, just the free and prior informed consent process, which could take some years, could just come to 20,000 euros before there's any indication of any business anywhere. And so when you look for these early stage development funding mechanisms and you look for something like that, you do not find it. So the Nagoya Protocol elements are poorly serviced from the financial instruments perspective. There are many other of these hurdles, but I want to talk very quickly about the regulatory hurdles for non-tariff measures. And this is in the case of marula, which has got many traditional uses, many products, and it's available in enormous quantities, and it has got huge potential for economic development, and it fits extremely well into the policy context, which I mentioned earlier. However, if you want to commercialize these products, and I'm just going to make the example of the European market, you've got a major task at hand. So when you're doing mangoes, if you've got a small business and they've got a source of mangoes, or they're farmers of mangoes and they want to get into the mango business, mangoes are commercialized. The standards are known. There are no expectations in the new territories like China or United States, India, Brazil, the European Union, because they know what mango is and it's recognized as safe. When you come with a new product from our biodiversity, there are barriers, and they are extremely complex and expensive barriers for any new species from our biodiversity, whether it's for foods, cosmetics, industrial uses, etc. So yeah, I'm talking about the new foodstuffs types. And then let's say for marula, there are many, many different products from marula. This is schematic, it's not exhaustive. You can't fit all the different product categories and the regulatory requirements into a slide. And you see for flavors, cosmetics, foods, health foods, there are different regulations. And these regulations are typically done by giant companies or not at all. Small companies can't do these things on their own. They typically have to collaborate together, or they have to rely on their big customer client to solve these problems. So in the context of the South African policy and our approach to commercialization, where we want to support the small businesses to go outward to the market, there are no instruments to support this work. And this slide just explains some of these regulations. For example, this REACH regulation, this is for environmental testing of new biotrade materials, including essential oils and traditional herbal medicines. You need to prove that it's nearly a pharmaceutical. You have to prove that the product has health properties, and these things are enormously expensive. The problem is that if you don't address these things, these are where the big opportunities are. So we know about honeybush, rooibos, aloe ferox. These are the big devil's claw. These are the big products from Southern Africa that generate the vast majority of the revenue and the economic development from our biodiversity. The problem is that the curtains for these regulatory measures came down in about 1997. In the European Union, it was 1997. In the United States, it was partially in 1994. And it's more recently in China, India, and other places. You now have to prove to the new territories that your products are safe for the consumers in those countries. And if you do not address them, we will not have a new rooibos. We will not have a new alloferox. New alloferox will not go to new territories except for the ones where it's existing in, unless somebody addresses these regulatory non-tariff measures. I want to now just very quickly talk about these adjacent sectors. So when we're talking to funds and other investors around the world and looking for those that are active in South Africa, we found that there's a confusion about the word biotrade. For them, eco-friendly coffee, fair trade and organic mango, and fair trade cashews with environmental stories, they call that biotrade. And we said, no, it's not. So you've got, they talk about agroforestry, organic agriculture, fair trade, regenerative agriculture, etc. These are all good things. And but this is funding for mangoes, because if you want to put marula on a global market, this is not part of their, this is not on their radar. So this slide just talks about the importance of the definition of what we mean by biotrade, and what we had to explain to people that biotrade is not a species. What we talk about biotrade is not like a tiger-friendly mango product from some Asian country. That's a different category and what we call the adjacent sector. And what we did find, though, is that there's some amazing innovation in this sector, and specifically leads us towards this blended finance understanding that we are making more and more cognizance of. And you have global companies with aid organizations, development finance institutions, development banks, and other organizations all collaborating together to set up funds where they share risks, or the donors and the development finance part take on a higher part of the risk and the private investors take a lower part of the risk. But here's one called the Amazon Biodiversity Fund. The Livelihoods Fund, a similar thing. You can see there are some private companies in there because they're interested in the vanilla from Madagascar. There's the Moringa Fund, similar things where they work with organizations and small farmer groups, whether they're doing shea butter or anything else. And they've got bankers plus development organizations working in these blended finance means. And this is quite a well-established one. This Eco Enterprises Fund is into its third fund in the last 20 years. And it originates from an NGO, environmental NGO, the Nature Conservancy, and the Global Environment Facility, and this fund called the Eco Enterprises Fund. And they brought together all these other stakeholders, donors, the Hibos Triodos funds, the Inter-American Development Bank, and they set up this fund, which has now made very profitable investments into biotrade type products in Central and South America. We learned a couple of things from speaking to these people. And their first point is that, okay, so what if there's no money in there, why is that? Because they say that if there's business to be done, money will follow the opportunity. And so that led us to think, well, is the opportunity of the biotrade sector being properly articulated to investors? And what they basically say is that you need to support the investment readiness of candidates and then present it to investors. And that way you can bring in private and other funding. And they also talk about the need to bring in these development funding and development finance institutions. And for that, you need to show that you're achieving public goods, that you're achieving conservation, biodiversity conservation, supporting holders of traditional knowledge, supporting small businesses and cooperatives in developing countries. And basically, that it would help our sector if we better articulated how the biotrade sector makes positive impacts on the SDGs, the Global Biodiversity Framework, and also the UN climate change goals and targets. So, in summary, there's a chronic lack of funding specifically for the unique aspects of the biotrade sector. There are very, very, very few examples, and basically the ABioSA program, a little bit of the Jeff 6 project with UNDP, the BioInnovation Africa project. They stand out as having at least some focus on these unique funding needs of the biotrade sector. What you do find is there are some small dispersed sources, and often there are eligibility criteria issues. For example, ticket size or other eligibility issues for different types of small companies. And there are giant hurdles that have to be overcome, and we suspect that they're going to be better overcome collectively. These are high impact but high cost market access regulations and the ABS permits, and there's some enthusiasm and momentum to look at sector level agreements to solve some of these problems in the sector. What we find is that some of these tasks are too big for individual SMEs, and we need to find better ways of supporting the associations and the organizations for collective actions, because some of these problems specific to the biotrade sector are enormous for small businesses. What we can learn from the funding in the adjacent sectors is that if you put together the public goods and the achievement of these targets, it brings in the interest of other stakeholders. And this is something that we haven't done sufficiently yet, but there is now some momentum on that. We need to continue with this thing of showing the business case to investors. We've got to show how the small businesses up and down Africa have got they have investable statuses or near investable. We've got to help them, the companies, to show that they are compliant with the regulatory requirements, and we've got a program now to support the categorization of them so that we can pitch those different SMEs in front of different types of investors for their different types of needs. So those are the main findings and the recommendations that we came from this. I haven't covered and haven't done justice to the Namibian side, and I haven't done justice to the typical funding requirements, which was done by my colleague Dagmar Hansbein. This is the summary report, but where you can find this, it's a simple search. You'll also find the long report with much more detail. Thank you very much. That's my presentation.
Thank you very much, Cyril. And also the link to the website where you can find the in-depth report is pasted in the chat. Thank you very much, Cyril, on that. Shortly, we will follow with the panelists and discuss what does this mean for the biotrade sector. But before that, I would give the chance to the audience if you have any questions regarding what Cyril presented. You can write in the chat or also use the question and answers part. No questions so far? I have to ask Alex, can we open the mics for the participants? We have Kai Schlegelmilch.
Yes, they can unmute themselves.
Okay.
You call on.
So please, Kai, if you would like to open your mic, then come forward.
Yes, thank you very much for the very interesting presentation. My name is Kai Schlegelmilch. I'm from the Federal Ministry for the Environment, Climate Action, Nuclear Safety and Nature Protection. And I listened very carefully and thought that is really a very interesting lever that you could have with more funding in that area to push biotrade. And I think biotrade is really very crucial to enhance the sector's potentials. So my question would be, what could the German government do in order to favor such biotrade, such funding? That is question number one. And question number two is maybe even more concrete. I recently got aware of the Common Fund for Commodities by UNDP. And I was wondering whether you have had contact with them, whether you've any working experiences with them, and what role they might play, as they are funding, as far as I understand, agroecological practices and organic agriculture and so on, and agroforestry. So I thought that might be a very interesting potential cooperation. I'm just by chance very close contact right now with the CFC, so I might even feed that into them, our communication there. Thank you very much.
Thank you for this question. So if it's okay, I would take a second question. Nyara Kurabakseca. Sorry if I did not pronounce that right. Please, your question.
Well, that was the correct pronunciation. My name is Nyirai Kurebukaseka. I'm an entrepreneur based in Zimbabwe. Cyril, I just wanted to find out what other smaller funding options are available that other countries could access. I think ABioSA and BIA focused on specific countries. GEF6, we do have GEF6 in Zimbabwe, but in a lot of the districts that we are working in, GEF6 didn't cover those districts. So for some of us, the rest of us in the region, would there be any other smaller ones that we could access that you came across?
Thank you also for that question. Over to you, Sol, for some of the answers.
Yes, thank you, Kai. I would take the lead from Katrin and my colleagues in Bonn about how best to pitch the biotrade sector. I think they do it. I think from my perspective, there is something that our biotrade sector needs to better do to development cooperation, and that is to explain the extremely high impact at the sectoral level if you help industry open up global markets for foods, beverages, new materials for cosmetics, new listings on the China list, etc. This creates a market pool, and then it allows investors and small businesses and other stakeholders to take those opportunities and to build into the market. And I think a critical look at the high impact key barriers to the growth of the biotrade sector is something that we could go back to. I know we've done it in the past, but I think we could go back to it and update it and make that a bit sharper. That's one thing that I would say. In terms of UNCTAD, there's a history of cooperation with the UNCTAD Biotrade program at different levels, national levels, at the Bonn level. The Biotrade program is also supported by SECO, which also supports the ABioSA program and other programs in South Africa. But you know, there's always a need for a new era, you know, so to present a new approach and to present new initiatives. So I think maybe there's something that with UNCTAD we could still do. Nyirai, I'm sorry, there are so few evident funding opportunities. You literally have to scratch around to opportunities that come up. They pop up and they say there's a call for proposals. You've got by the time you learn about it, you've got 9 days to present all sorts of things, and they disperse. There's nothing that is structured around the needs of the biotrade sector, around what the requirements of the Nagoya Protocol are to serve small businesses and their associations. There is nothing. So you can continue searching for different development cooperation grants, different small things here and there. And apart from the ABioSA, BioInnovation Africa, and a couple of these other small ones, that's all there is. It really is underfunded.
Thank you, Cyril, for the answers. You have a reply, Nyara? Please come in. We have that minute.
Perhaps as a follow-up to my question, is there any scope for ABioSA and BIA to cover the other countries in the region in future, maybe?
And there comes Adrian. We will
I think
have
Audrey will
a
speak
short,
to that. Yeah.
yeah, we will
Okay.
have also a short outlook in the panel, but please, Adri, come in.
Nirai, there will definitely be a third call for proposal. I think you were one of the SMEs in the first call for proposal for ABioSA. So it's definitely, we're not only for South Africa, it's for Southern Africa. And the call for proposal will go out. Actually, we're sending out an expression of interest first. That will be going out tomorrow. And then there will be an analysis for next year, but I'll talk about it a little bit later in the panel discussion.
Thank you, Adri, for that heads up. And as announced, we are now going to have a panel discussion on what does all this around the sector, what the study found, how the current situation is, what does it mean for the biotrade sector. And in this case, we have partners and allies from Southern Africa with us who worked with us in the projects to share here with you their insights and their findings on what did work and what not. We will have 6 different interventions, and in means of the time, each of the panelists have 5 minutes maximum to respond and to elaborate on that question. Thank you, Cyril, also for the questions. And I will briefly just introduce who will be on the panel and so that you can see what's coming. We will have Natalie Feldman, a representative from the BioPANZA network. Then we will have Marco Vieira and Jackie Crawford from PrimeAfrica. We also will have, hopefully then with us, colleagues from TIA, Wisilo Hobolo or Mundeli Ngoma. And we will have Prashanti Naikar from the Jeff6 in South Africa and Dashni Pillay from UNDP. And last but not least, Adri Al-Mohammadi working for the ABioSA project on behalf of GIZ. So I would like to start with Natalie, and I saw you already in the list of participants. If you're able to switch on your camera, that would be great. You all would need to unmute. Hi, there you are. Good to see you, Natalie. Thank you for being with us. So the question to you is, as you are a representative of the government of the DFFE in South Africa, why should government engage in supporting MSMEs, and what type of biotrade and also bioprospecting MSMEs is the target group of BioPANZA? So what kind of financing instruments are also available within that network? What is the offer?
Right, thanks. Thank you very much for the question, and thanks for this opportunity. Indeed, I am part of the network, but also the regulator at the same time. And that's what's unique also in South Africa, is that whilst we're regulating, we also get to know where the needs are with these many MSMEs in South Africa working in the natural ingredients sector. So to answer your first question, why should government support these MSMEs? And I think that Cyril has given such a very detailed presentation that gives a lot of the answers to my question, to the questions you've asked me. But the first reason, while we are a biodiverse, rich country, and we have many challenges within the country, one of which is challenges in terms of poverty, jobs, and so forth. And so for us, it's very important that government plays an instrumental role in economic growth and also job creation. Because in most countries, we know that MSMEs are the backbone of the economies. And so we see in South Africa that they contribute significantly to our GDP. And also there's quite a large employment portion of that, of the South African workforce in many of our MSMEs. Also, these businesses are quite resilient, and we also want to ensure that we foster local production, reducing the dependency on imports. And our MSMEs are quite flexible and adaptable in the face of global economic shock. So it's government's role to step in and provide that support, not only financially. I know we're talking finance today, but we're looking at things like inclusive development, knowing that we want to have women, youth, and indigenous people also advancing in the sector in particular. And then also looking at all this amazing grassroots innovation within our MSMEs. So it's important that government does provide some kind of seed fund or seed support, either through capacity building and the like, to many of our businesses that are in the sector, especially the small and medium businesses. And so in the BioPANZA network, we've already had some intro into the types of finance, but we're targeting mainly MSMEs, but we're also looking at now through the benefit sharing, we're seeing our IPLCs also starting their enterprises based on the benefit sharing and the traditional knowledge that they have. And we're also looking at other value chain actors in cosmetics and so forth, in food and beverage, our traditional healers as well. And then also the business support organizations like our cooperatives that are largely community-based, but also NGOs that support our businesses, specifically in those pre-competitive spaces. We have such examples in the honeybush sector. And then when we're looking at the type of finance, as Cyril said, it's very few and far and in between, and you really have to hunt. But I think it's time for South Africa to make the case for this sector in particular, given now that we have launched the BioPANZA and that there's a lot of stories already out there showing the successes of business, small and medium. So it's looking at blended finance models. We heard Cyril also mentioning the NIP, and I think there needs to be more focus given back to this particular mechanism, which started out when we hit COVID, and there's a lot of potential that we obviously have not tapped into at this point. But now with the launching of BioPANZA, it gives us a better chance and opportunity to knock on the doors of our treasury. But most importantly, and we've also alluded to this by the questions being asked by the audience, is through partnerships. Partnerships are key, and in this case, the partnerships with ABioSA project and the BioInnovation Africa project. Also, you'll hear from Jeff funding. So it's all trying to synchronize the work that is being done through all these different avenues of funding to make sure that we align our efforts and not work in silos, that we're all trying to reach the greater vision of the sector and supporting all our small and medium enterprises. I hope that responds to the question. Thank you.
Thank you very much, Natalie. Very insightful, a vision for the sector. So to have one idea where to go. That's also an important fact of partnerships, that the partners know where they want to go. Thank you for that insight. And now welcome with me colleagues from PrimeAfrica, Marco Vieira, and I think also Jackie Crawford is with us. So Marco, according to you, what would make the biotrade or bioprospecting sector more attractive for investments of the institutions that you have worked with? What makes investment attractive, or what makes it attractive to invest?
Great. Thank you very much. To give you a little bit of background on our response to this, when I sat down with Jackie to plan it, we both approached this from very different positions. So we'll both answer and hopefully give you a nice comprehensive view on what we think. But I think to begin, I'd like to just let you know that this is obviously, by the phrasing of the question, something that's based largely on my experience and opinion in the sector and our involvement with the kinds of funding agencies that we generally work with. This spans multilateral agencies, bilateral agencies, local development finance institutions, commercial banks, and then even private equity. So if you look at that suite of investor types, I think it's evident to people who work closely with finance that biotrade rather than the prospecting aspect would probably be more appealing because it's closer to a revenue stream, right? So that's the first thing that I think is important to point out. And then what we think is necessary to bring these types of agencies into the fold so that larger volumes of capital can flow towards biotrade and bioprospecting as well, is really, it's quite straightforward in many ways, but we also understand Cyril has given us a very comprehensive walkthrough on where the challenges lie. But we think it's often those simple things that need to be addressed in order to bring these companies closer to these finance houses. And those things are simple, like good governance, maintaining sound financials, and then also things like labeling. Labeling and certification often opens up markets, and that is where larger revenue streams can be created, and that then it brings financial interest closer to these organizations. And we base this on our understanding of the types of companies that are involved in the biotrade, often being fairly small scale. Even if they are growing and robust, they very often start at very small scale and then begin to grow. And once they're at that point of attractive growth, that is where we think the financial agencies, as a general rule, would be interested in funding these types of ventures. I think another element to keep in mind is that offsetting of certain costs is also very attractive to a lot of these agencies. And by that, I mean all of the costs of training, certification, etc., that enable a business to scale well. If those could be linked to technical assistance facilities or funded from technical assistance facilities and grants, then that means that those agencies can then come in at a point where the revenue streams that the businesses are generating enable debt products to be utilized in funding them. That's often a prerequisite for many of these agencies, especially those linked to the private businesses of the larger multilateral funders. So that I think is quite an important aspect to keep in mind, and that also goes into the certification and labeling aspects as well. And then lastly, just to quickly address the matter of ticket size. Often for direct involvement of DFIs, they're really not interested in ticket sizes of smaller than 10 million rand, if we use the South African context. And it's largely transferable to the Namibian context as well, given that the currencies are pegged 1 to 1. And they would look at anything between 10 and 100 million rand. Then impact funders would consider smaller ticket sizes, but probably no less than 5 million rand. And that's often because of the fact that these deals cost quite a lot to put together, and that's why they need to be at a certain sub-minimum, of course. And then private equity would look at 25 million rand and above. I think rand is trading with the euro currently at around 20 odd to a rand, or 1 rand. 20 rands buys you €1, so that gives you the frame of reference as well. And then there's an important role that donor and grant agencies can play. One is direct within companies supporting, the labeling, etc., that I've already mentioned, but also at sectoral level, the work that ABioSA does, I think, is extremely important. And while that benefit may not accrue at an individual company level, it's absolutely fundamental in supporting the industry at large. So it's important to acknowledge those role players as well. Jackie, let me hand over to you quickly. I'm sorry, I took a little more time than I thought I would need. Thanks.
All good. I'm curious to know what Jackie now has for an approach.
No, I think, thank you, Catherine, and everybody else on the call. Thank you for the opportunity. I think at PrimeAfrica, we've been fortunate to have been involved in the development of the bioprospecting industry in South Africa for, I think, something like 13 or 14 years now, and many from the school very familiar. So hello to you all. I think also we've seen over the last 3 years really an enormous growth in the field of blended finance. Cyril spoke about it. And I think Marco has now given us a view from, if I can say, the bottom up. You know what? If you're an SME, or if you're in any other form of in the sector, what are the key things that make you ready for investment? And I think I just want to share a few thoughts on what we've learned around blended finance and how that could be an opportunity for the sector in all the countries represented here in across Africa. I think the first thing to say is that blending of finance is not a new thing. Since the earliest days of fund management, there has been different forms. But I think it really became popular and picked up speed since the SDGs were published, and specifically a form of blending where we can take, where we can use concessional capital or capital that is willing to take on high risk and blend that with private capital. So the recognition is that we're not going to achieve, there's not enough money in the world for us to achieve these if we don't do something different, and blending is one of those different things. So we've worked over the last few years with a number of fund managers who does blending, and I think that's the view I would just like to share with this audience. I think the first important thing to know is that blended finance in this context is about more than just blending different types of capital that have different. When we think of blending in the biotrade sector or any other form of similar sector where there's biodiversity impact, positive biodiversity impact, it's important to have that sectoral focus. So a financier, a banker, looks at a certain industry and want to understand the risks in that industry. So when you think blending for biotrade / bioprospecting, it's important that we go through where we understand all the commercial risks. I suppose you can group the commercial risks from a banker's perspective or a funder's perspective into two components: impact and revenue. Impact is all those good things measured through your monitoring and reporting and verification system. That's linked to the whoever is your funder, and I want to know this has been a positive impact, positive biodiversity impact, positive gender impact, societal impact, and the whole gamut of these things. But also revenue. That's a key question in biodiversity investment field. How do we generate revenue returns on capital? And there, the biotrade sector is wonderfully situated. It's probably one of the few where there's a very clear and direct revenue line
And that's very exciting for this industry. So once again, let's put the banker's hat on, or the fund manager's hat on. The fund manager wants to understand how the industry works, how is positive impact created, what will be the returns likely, do we have a record? Yes, we do. The funder would also like to understand that there's regulatory and legal compliance. So, and of course, that is a big yes as well. And then overall the risk. So the next thing the funder will say, but we can't do small. Market, Freudian slip there, Marco. Marco spoke about ticket size, Cyril as well. Generally speaking, funds look for scale. They struggle to do things at a small level. So that presents a particular challenge to SMEs, but it's not, it's a challenge that can be addressed. There are precedents in agricultural finance, where you also often deal with small farmers, and where a big fund would like to come in and make a big difference to a lot of small farmers. So I think that's great. So I would say that, and Katrina, I'll end with this, is how do we present ourselves as an industry to a significant funder? Well, firstly, we come with a proposition we can give you that impact the revenue, and legally compliant. We can help you understand the risk, and we can give you scale. But you need to help us to develop a blueprint for your own investment. And I think that's an important word, the blueprint. So the blueprint will involve what the banker does. It's about understanding what's the particular instrument going to look like. Do we have a toolkit with which if a small business come to this fund and say, I need to do the following. I am entering an international market and I need trade finance to cover me for 3 months while the container is on the ocean and I'm waiting for the invoice to be paid, for instance. Or, so how will we do that? What is the mechanism? Or I need to buy new equipment. So I think the good news is there are instruments available. It's not like we have to go and design stuff that doesn't exist. Trade finance, quasi-equity, a whole gamut of financial instruments that are available. I think that so that blueprint is important, and then the big question is, who does the blueprint? How do we pull all of this together? So I think we have the makings of a great opportunities for blended finance in this field. All the elements are there. It is going to be for one or more organizations to work together very constructively with one or more fund managers, and they exist. They are out there, perhaps not active in bioprospecting, but in the agricultural field. And they're familiar with these risks and ticket sizes. They've done it before in different settings. So we've got to find ways of working with them, and then find ways of bringing them the concessional capital that into the system. So I think that supports Marco's viewpoint. I think Marco has spoken from, let's say, given a bottom-up answer, and I've given a top-down opinion. Thank you very much.
Thank you very much, Jackie. Thank you very much, Marco, for this both approaches that are both valid and feasible. And I think the audience appreciates both sides of almost the same coin. Thank you. So next we will hear from the J6 perspective from Prashanti Naikar. What do you think, Prashanti, in your opinion, what are the types of activities or also the category of MSMEs that are challenging to fund within this biotrade sector, and why are they challenging to fund?
Thank you, Katrine. Yeah, so like Natalie, as she has alluded, Cyril's covered a hell of a lot in that presentation. So I'm going to pretty much pick up on that presentation on the how. And I'm going to break my feedback into 2 parts, right? The first part is to respond to your first question on which segment of the MSMEs, is actually the target points for finance. And when I look at that, I'm looking at it in relation to the entrepreneurship life cycle. And that is the pre-commercialization ideations embedded there, commercialization, which includes the start, the scale, and then the last stage of the cycle, which is sustain. Right. So from where I'm sitting, and I'm not going to repeat what Cyril's already unpacked quite nicely. From where I'm sitting, also coming from a point of experience in the sector, is I see the phase in this life cycle, particularly around pre-commercialization to startups, right? So it's the ideation to startup phase that a lot of crowding of funding that needs to happen, right? Especially since the long list of things that needs to be put in place. It's the most critical point to have all those boxes ticked, whether it's the coming up with a novel prototype from that idea, and then the manufacturing of it and meeting good manufacturing requirements. So all of that happens between that ideation and that start phase. Since as we progress through the life cycle, ideally the financial independence should advance as well. And the thing is that I would say another point of that life cycle where fund crowding could happen is especially at that transition phase. For an example, from micro to small, that point of when the small is transitioning to a medium, and when that medium is transitioning to large. Now, we've spoken about different types of finances, grant finance, debt finance, and those blended finance options or concessional finance options takes us into the debt finance options, right? For this life cycle that where a value chain is being developed. Now, and also we've heard about the BioPANZA. Now that's a collective of public sector South Africa and development agencies trying to see what the crowd looks like for finance. And a lot of it is grant finance. And it would be ideal for that finance to be channeled to that point where you're transitioning from ideation to micro or micro to small. Right? Once the structure's built and best practice is established, revenue momentum is gained to an extent. Obviously, not shifting straight into billions. It's definitely building that confidence to now begin to explore in this entrepreneurship life cycle a blended funding streams and more leaning towards debt finance. Now, those are my two, my input to which points of the life cycle we should be targeting. And I think a lot of effort's been put to date, especially on that ideation to micro enterprise aspect of the life cycle. Now, I know like 12 years back, there were about, you can count in one hand the number of medium enterprises in the sector. So, I'm not entirely, my colleagues the network can guide here as part of the Q&A. My observation is that a lot of that support's been, zoomed into that ideation to start. I'm just wondering what happened to those mediums. Did they get absorbed by multinationals or what's the status quo? So I'm putting back a question to the audience. Then the other area, right? The colleagues put on the table a variety of those finance options. Now, and like I said, I've described to you who's ideal to tap into those finance options, like those blended finance, concessional finance, and the likes. That's debt finance, a strong leg of debt finance. So what it also means that it's our medium to large enterprises that is quite a good case to tap into those options. And the benefits of that is when a business begins to think about having a global presence. Having, for example, if it's a cosmetic business, having a concept store in Paris. So it's especially to support a venture at that phase. Now, you've heard about the risk management. It sounds like a tall mountain. So I'd like to then throw in some ideas, like especially with the sector, free, prior, informed consent is integral at the onset. Now, drawing experience from the UNDP GEF6 project, we've also run a free prior informed consent as part of our social environmental risk management. So where I'm going to with this is, can't we look at that critical requirement because it's part of social risk management, where we disaggregate and work towards, building block type of wins, which to the donor end or the financier end, it's showing that traction that's being built in an emerging economy. So I'm starting off with disaggregating big problems and thriving on small wins until we get there. Then also, you've heard also from my government colleagues, our national development plan and all our strategies linked to it is centered around, involving and taking grassroots innovation into the mainstream value chain and economy for sustainable livelihoods. So what kicks in there? What did you call it? A criteria or an area for finance, I would say, is governance, right? Tailoring and developing governance for these type of community, business, research type of partnership to move from ideation to micro to small. Tailored governance that can work optimally is, trust me, it's a loose term dropped, but a very difficult term or system to optimize. So finance for tailored solutions there is an integral step two as part of risk management downstream in the entrepreneurship life cycle. Then the other one is I spoke to you about that blend of investors. We use the word investors also as an aggregate term. So I'm going to suggest, right, we spoke about BioPANZA crowding a whole lot of grant finance. There's, look at the future of blended options, concessional options. So I'm going to leave you with now actually suggesting an aggregate model to be able to tap more into advancing our medium enterprises now. An aggregate model where we actually put a concerted effort on a cluster type of applications for these concessional finance. So a ingredient cluster application so that we handle that as a consolidated, as an aggregate, because unfortunately, since we are in an emerging economy, building momentum to the scale of these debt financiers, it's going to take 20 years, right? So let's make it quick, fast, and easy. Cluster type of interventions, a concerted effort and support to be able to do that, I think, can get us faster to be able to get to, being a salient contributor to GDP, a salient natural product provider, and not just an ingredient. So there's a lot there. And a means to an end, especially since South Africa, public sector South Africa has been instrumental in helping the sector to leapfrog or to propel to a great place. A quick action is socializing and building the relationships with our multilateral banks, like the Development Bank of Southern Africa, African Development Bank, because those are our means to bring in that global private finance for us to access. So I'm going to wrap up there. Two-pronged. Let's ride on quick wins and the different points of the life cycle to target. And the last point is, yes, it's an emerging economy, so let's build on small wins to be able to reach those comets and stars out there in the universe. Thanks.
Thank you very much, Prashanti. Quick and fast wins, and this is also the motto now for the last two interventions, because time flies as always. I would like to ask Deshni Pillay from UNDP to join me with the video. Thank you also for your time and for being with us, Deshni. So the majority of funding for biodiversity is often targeted to conservation and sustainable use, two of the objectives of the CBD. But also there is the need to fund bioprospecting and biotrade in the value chains to provide these SMEs who are into that with this financing. Is that something that you at UNDP are working on?
Yes, so thank you, Catherine, for the question. So I'm going to start with two initiatives that we're busy. One we implementing, and that's the BioFin initiative. We're in our third phase of BioFin, which is the Biodiversity Finance Initiative, also CBD intervention that the UNDP was given the mandate to implement. So South Africa has benefited from, I think we're on our third phase of the Biodiversity Finance Initiative implementation. And that has, the idea is to look at how we bridge the finance gap, but also look at innovative solutions. And in South Africa, we've started mainly our finance solutions being developed for the public sector. And we did a whole lot of different projects, but one that I'll highlight is the finance solution on the biodiversity sector portal. And that was a solution where we looked at it was like a matchmaking facility. We brought a whole lot of biodiversity projects, mainly from the land reform sector, biodiversity stewardship. And then we brought in private investors to look at matching the investments that these projects needed. And one of the key things coming out of that finance solution was, and I think Jackie or somebody mentioned it earlier, is that the quantum of funding was a mismatch. They didn't match at all. So we had projects that needed smaller amounts of funding, but the investors wanted to invest more. So that was one learning. And recently, within this year, what UNDP through the BioFin initiative has done is investigating developing a biodiversity financing facility. Now, Cyril's mentioned a whole lot of funds within the biodiversity sector, and we have similar in South Africa, lots of different funds. And we wanted to bring in an innovative way of using public sector funds and private sector funds to start bringing the two sectors together to start financing biodiversity projects. So that's very early in its establishment. We're busy with a feasibility study, but important to note that that project is being run with the UNDP and the Development Bank of Southern Africa, where we're really looking at de-risking, the emerging or the SMMEs. And Prashanthi and others have also brought in the various risks that come about in the value chain. So I've spoken a bit about
maybe the second initiative you mentioned, so that we have the chance to hear you and also the last person to speak.
Sure. So the second initiative is our Natural Wealth Initiative. This is a new initiative that we're developing, and I've had Natalie and Prashanthi and others from the department present and look at the various opportunities that we can start developing to enable the biodiversity economy strategy, and then also the white paper. So learning from other countries within the region, there's lots of new technologies, blockchain technology, etc. Rwanda has also just launched their gorilla NFTs, non-fungible tokens. So we're looking at those kinds of initiatives that we can start bringing in to South Africa. I mean, we're a mega diverse country, so we need to start looking at how our biodiversity can start bringing in the funding that we need. So I'll end there. Or lastly, we're also busy investigating or looking at as part of the BioFund solution, sustainability bonds, green bonds, biodiversity credits, and looking at nature and biodiversity as a new asset class. So we did a lot of work with the fund managers around training them on biodiversity and looking at them, looking at this new asset class. So I'll pause there. Thank you very much.
Thank you very much, Deshni. And now I would like to ask Adri from the ABioSA project. ABioSA has been providing funding to MSMEs over the last 2 phases of this project, around 7 years. So what are the main learnings of the project you're leading there in Southern Africa? And what could other countries also learn from this? Because this is to share information, what have been done, and maybe also, as you're going to close now the panel and most of the participants are going to leave, I think, sharp, a little bit outlook in the future, what to expect then still. And to the audience, if you have questions, please also leave them in the chat. So in any case, you are going to leave on time.
Thank you, Catherine. I think definitely some of the key learnings in the last 2 phases, and the second one ending in December, we really realized, and you've seen it in a lot of the in the presentation slides from Cyril, was that you really have to approach the sector from a systemic competitiveness approach. You cannot just support MSMEs alone. You have to look at the whole system. So on meso level or meso level, as Cyril mentioned, we have been supporting these sector plans in order to look at those activities that affect all MSMEs. So and we call it sort of the pre-competitive space. And that is where you can have big wins to ensure that support is given to MSMEs trading in the genetic resources, but and it's those benefiting over and above the members of the association. Those could be, for instance, support to ABS permit applications through the association, non-monetary benefit sharing initiatives, conservation measures, even EU regulatory applications like Cyril have mentioned. I think the key, or one of the key learnings that we've seen out of evaluation of our the associations is the trusted, aggregated, verified data that comes from this. And I think both Cyril and Jackie mentioned it, is we need to create trust in the sector. And that aggregated data that is compiled by the associations give them the confidence to share the potential growth and opportunities within the sector based on that information. On micro level, we have been supporting very much on an individual basis, call for proposals, getting support, and both of these levels we do it match funding, so 50-50 basis. And what we've decided, or what we've learned for the next phase, is that it will be a more programmatic approach. And I think here we kind of alluding to what Prashanti has mentioned, where the idea would be that ABioSA, together with under the BioPANZA market access cluster, will send out an expression of interest to MSMEs, together with community cooperatives for Southern African MSMEs. And the idea would be to, at the end, get all these MSMEs to apply to or to complete the, it's a management referral tool that was prepared. It's taken its time to get here, but final preparation was supported by PrimeAfrica in order to classify the MSMEs in 5 broad categories: startup, emerging, established, growth ready, and export ready. And depending then on what the type of MSME is that the funder or the investor is interested in, we would be able to support them to provide a group or a category of MSMEs based on their requirements. And the idea would be also to support the, let's say, the beginning SMEs or the groups to be pre-vetted on those topics that I think it was also Jackie that mentioned them, where it's looking at governance, looking at processes and procedures, getting all those things in place in order to be ready for support from any of the funders. I think the important thing is no institution can do this by themselves. We need to look at an ecosystem. And in our case, in South Africa, we're looking at the BioPANZA ecosystem, where different business support organizations will support different categories of MSMEs, depending on what the funder or the criteria is that they look at. Thanks.
Thank you very much, Audrey, for this short overlook on the learnings and what is upcoming. You all heard there will be the Biotrade phase 3 launched early next year. And we are now at the end of our time, not at the end of this discussion, neither at the end of the work we need to do. But we have heard from the panelists now that partnerships is key to have a vision where to go. We need to better articulate and make the case, make it different, use blending, and go into that phase where the enterprises are in transition, where they are changing, where they need support to improve and to move forward in order to get the funding and to keep investing into Biotrade and ABS, and with that also achieve conservation and sustainable use with the benefit sharing, which is what we are striving for. A huge thank you from my side to the audience. Thank you for these extra minutes, and also thank you again to all the panelists for your time, and thanks to the team supporting this endeavor. With this, thank you and have a good day, a good afternoon, and a good end of the day in some cases.
Thank you, Catherine.
Bye-bye.
Thank you. Bye-bye.
Thank you. Bye.